Welcome to the Startup Operator Podcast. I'm Roshan Cariappa. My guest today is Ritu Verma, who co-founded Ankur Capital in 2013, excited by the idea of enabling innovations for the next billion. Ritu has a PhD in physics and has had stints in large corporates like Unilever and Philips, where she worked on bringing innovations from the lab to the market. Ankur Capital has since funded some of the most promising companies in sectors like Agritech and healthcare. On this podcast, Ritu spoke about the nuances of taking innovations from the lab to the market, some exciting headwinds in Agritech and healthcare, how they are striving to add operational and strategic value at Ankur Capital, and much more. This was a fascinating conversation, so do stick around. Hi Ritu, welcome to the Startup Operator Podcast. Thank you so much for making the time.
You're welcome. Thanks for having me.
Yeah, looking forward to an exciting conversation about startups and investing and all of those things. But maybe to begin with, could you talk to us a little about your journey into venture capital itself, then founding Ankur Capital, and some of the learnings you've had along the way?
Absolutely. So, I started life out as a physicist. So I have a PhD in physics, and I think I'm back to the same place. So it's like a full circle here. So, I think I always was sort of interested in innovation, and especially innovative stuff getting applied into the markets. So I worked my way through sort of different kind of operating roles, focusing on bringing products to market across what I would call more intrapreneurial ventures across the globe, in FMCGs to electronics and things like that. But I think, and including doing some, VC-linked investments globally in tech and technology that was being disruptive globally here, so batteries, things like that. So I think the journey to Ankur Capital is an interesting one because I think it pulled two pieces to sort of together, right? One is the fact that it's sort of in this innovation space, and there are all these people with a lot of these ideas, etc., that are sort of coming up with ventures. And at the same time, there is an India lens to this whole piece where actually you're seeing a lot of innovation happen. And so around 2013, 2012, my partner and I were chatting and working with a bunch of startups. And there was a lack and dearth, and it was still early days. It was pre-Flipkart days. So I like to say pre-Flipkart, post-Flipkart, different worlds here, yeah? So where, it was tough for entrepreneurs, right? The initial capital was kind of missing. So we saw this as an opportunity of sort of looking at, innovations that were happening, and in the larger context of innovations that were happening in India. There was still stuff that was happening on the consumer side, but there was this whole larger mass market where there were a lot of opportunities. The advent of technology was sort of coming in there, both from physical products as well as digital products. And so that's how Ankur Capital got set up, to say Ankur means seed, and that we're coming in to invest very early in these innovative ideas. Yeah. So that's kind of how it started. Right. I think the second part of your question to do with, just learnings, and there's this one learning that I will want to sort of point to, and this keeps coming back, and being in this business, you keep getting reminded about this, is that people are so critical, right? And whether it's the entrepreneur and their vision and how they're thinking about the future, whether it's the resilience, whether it's their ability to sort of attract other people to their ideas. So, we're investing in technology, right? But at the heart of it is the person, and without the person, the technology is worth nothing. Yeah. So I think that's one learning that just gets re-emphasized year on year. And
yeah, that's a great point. I think Naval Ravikant calls it the founder product market fit. Right.
Absolutely. Good.
Yeah. Yeah. So that's, yeah. And actually, when you look at some of the most successful companies around, you kind of can't imagine another founder having done that. Right. I mean,
It is the individual. It's a
Yeah.
journey and it is the individual. It is so much more the individual. And yes, there is an ecosystem that the individual is playing in,
Mm.
but each individual would have taken a different journey and the outcomes could be very different.
Right.
So I think that's pretty critical.
So one follow-up question on your background, and then we'll quickly move on to
Yeah,
the work that you're doing
yeah.
with Ankur Capital. So you have a core science background, right? So how does that help you in the work that you do today, which is investing
Yeah,
and
I didn't close the loop when I said it is full circle, right? So, as a physicist, you get into difficult problems you have to solve, and there's multi different things that you have to do, right? So it's not, especially if you're trying to get experiments to work at cutting edge stuff. You have to fix the pipes, you have to do the fancy math, you have to do all of it, right? So there's a lot of different elements that sort of come in, and you have to wade through all of that and you have to solve the problem and get out at some level. So I see VC investing very similar. There are lots of different things, right? I mean, for us to invest, for us to actually support a company, to exit a company, they're super difficult problems. And they're problems that people don't have answers to. If they did, they wouldn't be there for investment. Let's put it this way.
right,
So that's the similarity that I see between hard science at the research level and VC, right? You're solving problems that haven't been solved. So you just have to put your mind to it. You have to put everything else to it. You have to pull in, hustle, and get whatever else to do to make it happen. And
right.
that's kind of how I see the similarity here.
Okay. So what was the motivation to start Ankur Capital? If I can say, what was the seed behind Ankur Capital itself?
Yeah, so two couple of things here, right? So I think both Rama and I had sort of sat in what we call the next billion, but perhaps another name in the past was these mass markets. They're super vibrant, can be super attractive, depending on how you sort of approach them, right? And at the same time, we saw people who were innovating for these markets, but somehow were, hatke because it wasn't mainstream looking at the top 100 million, right? So I think that's kind of where we saw the excitement and the interesting thing, saying that, look, there is a story here, that's going to play out over the next 5-10 years. There is a positive impact that this will create on the lives of the people who are parts of these markets. And as they integrate much better with the other markets that are working better. And I think that was the intersection that was exciting to us. So basically that's what drove our interest in actually setting up Ankur Capital here. Right. So that was the genesis.
So this was the pre-Flipkart days, right? So 12, 13, I mean, I don't know if too many people were talking about the next billion because we were still...
No, they weren't. They weren't, right? So right. I recall talking to, a very famous VC, right? And said, hey, we're looking at this. And one of the words I mentioned was agriculture in the middle of it all, yeah? And so he turned around to me and said, this education and health is all okay, but don't go anywhere near this agriculture, right, basically. And one of the first investments we made was in agriculture. It was way before it was called Agtech, right? So I think I learned one lesson out of that whole thing, right? I mean, it's an entrepreneurial lesson, right? Lots of people will tell you, no, you're stupid, or no, this will not work, right? Mm. But at the end of the day, you've got to follow your gut as to what you think is going to happen here, right? And right. I think that's pretty critical.
Right. So what is your focus sectors, and do you have like an underlying thesis for each of these sectors, or generally how you look at your investments as such?
Good question. The answer is we don't have any sectors, right? Okay. Having said that, we do have an underlying thesis, right? And that underlying thesis cuts across many sectors, which is why we don't say that we have sectors, right? So the underlying thesis here is that we believe that India's built her digital highways here, right? So, and that has accelerated much more than when we started. We saw inklings of that when we started, but obviously geo has changed matters and penetrations have moved to a very different level, right? And what's so exciting about that digital highway, right? What's exciting about that digital highway is that it allows you to connect with somebody very different, very far away, not such a fancy customer, all of those things, or producer, right? And we've always had communication channels, right? We've had TV, we've had radio, right? But this device on your hand is the first time that it's a two-way tool, right? So the cost of you accessing that customer has changed dramatically. It is cutting boundaries like never before. And it's a two-way conversation. It's not a one-way conversation. And that fundamentally allows you to do things very differently. It allows you to scale at a different level. It allows you to come up with solutions for markets that were very, very difficult, right? It allows you to be laser focused on how you target a customer also, right? Because you know so much more, as opposed to like saying, I'll put a billboard up on whatever fancy highway here or whatever else it is, right? So that's the underlying thesis. And we've seen that play out in health, we've seen that play out in ag, we've seen that play out in fintech, in education. It's that same theme that sort of plays out, basically. And that's what's more exciting. There's a second theme, which is perhaps a little smaller than the first theme. And that is, how have products been innovated for, right? And I'm talking about game-changing, IP-led, disruptive technologies. It's been a trickle down from more, markets in the West, typically, down to markets like India, right? But I think over the last 3-4 years, these have been changing. And what you see is a lot more contextual, very high IP, very high quality companies coming out, right? And they are spanning, health, they span ag, they span, space, so it's a wide variety of things, right? So then people are innovating for India. There's biotech, right? I mean, all these. So this is another thing that I think is sort of happening, and that's another thesis that runs through it. That there are products developed in the Indian context, meant for the globe, because there's a lot of part of the globe which behaves very much like India, and that gives you a large market and gives entrepreneurs in India an opportunity to build a company.
Yeah.
So
No, it's a great point actually, because I think I see a little bit of a reverse osmosis happening in some sense, right? So earlier, I mean, it was almost natural to expect that, developed markets innovation will trickle down to India.
Trickle down, absolutely.
Yeah. But then, I mean, today, like if you look at payments infrastructure in India, it's
Yeah.
leagues ahead of anywhere else in the world.
Leaps
Right.
ahead. Absolutely right. You see that, you're absolutely right. Even in the digital stuff, you see this happening, right? That, okay, there may be a Shopify, but there's a Dukan, I mean, there are these things that are happening which are for the context that you're building this stuff into, right? So I believe there'll be a lot more of that.
Right. Want to pick up on something that you said, which is, the IP-led innovation, right? What are some unique challenges that you see in bringing this innovation from, let's say, a lab to the market?
Yeah. So I think I don't think this is just about IP, but let me just separate two questions, right? Lab to market, I see lab as the ideas phase. Perhaps you're twiddling around, you're doing stuff. And in my mind, it applies just as well if you have a software-led product or you have a hardware-led product, right? I think end of the day, I think the biggest challenge is for anybody is to make sure that you are making a product. And by that, I mean something that somebody else sees value in, not what you see value in, right? So a lot of people are engineering backgrounds, a lot of people are coming at it, whether it's a biochemist or whatever, right? The market doesn't care, right, as to what lies there. I, as a customer, care about how it gives me value, whether I'm a business or a consumer, it doesn't matter. And to find what that fit is so critical. So spending time, I don't care whether you're doing rocket science or whatever it is, the end of the day, what is it that the customer wants is the critical piece of lab to market. Yeah. And I've been through that journey myself as a technical person and got slapped in the face by the consumer of what I thought was the best thing in the world. And they said, hey, dude, this is crap. Okay. So, it is so important to spend time with who you are developing stuff for. So I think that's a pretty critical part. Coming back to your question on IP, right? I think there are challenges in the Indian market, right? I mean, one of the challenges is this, a lot of the risk capital doesn't sit here for something like this, right? Where in the two types of IP, right? IP and software is still all right? That's still software. But as soon as you get into IP and to say, let's say biotech, that's a different journey. It's, it needs that risk capital because, commercials hit at a much later scale. essentially. So that capital is sort of missing in India. And because India is not necessarily known for that, foreign capital is a bit suspect, right? It's not like a destination to head to, whereas they'll head to Israel, they'll head to the US, right? So fundamentally, I think those are challenges to overcome in that. But I think there are absolute gems, and this is why it's very exciting as an early stage investor. There are absolute gems in these spaces that actually have super potential of what they can actually disrupt globally.
Right. Not just IP, right? I mean, even hardware startups in some sense.
Yeah,
I mean, they
same
have
problem.
yeah,
Same problem.
they have
Yeah.
longer gestation periods, and you can't really fail fast in some of these sort of spaces.
Yeah,
Right.
yeah. You can't
So
fail fast. Yeah.
So one of the questions I had was, how do you sort of accelerate that cycle of iteration, where you ship, you learn, and then you revise whatever you're doing, and then,
Yeah.
how do you collapse that cycle of innovation? Because a lot of these things could take many months or, years even, right? So how does the maker or the scientist or whoever that you're working with, right? How do you make sure that they're on track and that they're working along with the market?
Yeah, I think anybody in one of these kind of businesses have to ask themselves very hard questions, right? So is my IP good enough, right? Is it high enough, right? Is the moat high enough, right? So a product company, like when you're talking about a consumer-facing product company, I mean, the wow on the other side becomes your moat, and I want to use this messenger device versus that one, or something like that, right? So similarly here, I think that what needs to sort of happen is, at least at the technology level, right? Your IP has to be disruptive enough, like meaningful enough. So I think a lot of people need to be thinking about, what is it? Why would my invention, if I can call it that, right, or IP-led thing that I have developed, why would that be relevant for the market, right? We all know how to solve. It's not water in the desert, right? So why would that be relevant? So before you kind of embark on this much longer process of the journey, it's super important that you've answered why. And I think then then there are bits and pieces which have to work differently on scaling and making your stuff work. But it's no point going through that long journey if there isn't a customer at the end. So that market, and this can all be conceptual, right? I mean, nobody's asking for a physical product, right? You can say, look, if I perform at X level, what would you be willing to pay for this, right? Like, or if it's at Y level, what's the price? Why? Just again, getting the customer feedback before you embark on what is a more torturous journey.
Right. Yeah, that's critical, I feel.
Yeah.
Um, so the other thing that I had is, because the deal flow, so to speak, right, is pretty scarce in some sense, right? When you're looking at this sort of a niche segment, do you have stated problems that you kind of seek solutions for in the market, given your core background as well? So do you have a dump of problems that you have, or 50, 60 problems, and then seek out that innovation in the market? Or does it work the opposite way, the usual way where,
Absolute
people
opposite
reach out?
way.
Okay.
The absolute opposite way. I think we can do a lot more of this in the digital technology world, just because there are so many more entrepreneurs.
Right.
I think you have to rely on finding the gems and not lay your things. They still may not fit. You may still not agree with it. That's
Right.
fine. But I think you have to be open to what are the IPs out here, basically.
Right.
So
Is there a plan to like make a research institute of sort, and find the best and brightest folks, define a problem for them, and get them to work on it? I mean, do you think that kind of a
no,
model works,
no.
or
So I think there are lots of support things in the systems that are developing for some of this IP-led stuff, right?
right?
And I think they will continue to sort of develop. Then entrepreneurs are no different,
Hmm.
right? I mean, I think to be an entrepreneur, it doesn't matter whether you're doing software or IP or hardware.
Hmm.
I think it's the journey. The skills may be a little different, right? I
Right.
mean, the type of people you may need to hire. I mean, obviously, a guy developing an app doesn't need to hire, I don't know, someone who can do machining or whatever, things like that. Those things are different, right? But I think the journey is no different, right? So I don't think it's about getting the best minds to it, right? It does have to be above a certain bar, but it also takes that entrepreneurial mindset to make it happen. I think we have a lot of interesting IP stuff that sits in all sorts of labs and all of that have been supported and by DST and DBT and all sorts of things. Yeah. But that doesn't make an entrepreneur, that doesn't make a company.
Right.
So I think that step is still,
Right.
research institutes don't solve for that problem.
Right. Um, so let's talk about a few of your investments. If you could take us through the
Yeah.
why, what, and how. And maybe talk us through some of the founder stories also. In terms of how they made that shift and why we should look out for them. Watch out for them.
Yeah, absolutely. Right. So, I let me start with one of the first investments we made, right? And I told you that we invested in this company when the word Agritech didn't exist, right? So there were 5 companies out there that I classify today as Agritech at that time. And, so there were 2 of these guys who sort of left their jobs at GE and at Tata Motors and said, hey, look, we see technology in everything else, but we don't see it in agriculture. We want to build something here, right? And what they ended up building here was, they obviously went through pivots, etc., of what they were doing. At those days struggled with like, who has a phone, how does it work, all of that good stuff. Went through figuring all of those out hard way, I would say, right? Really hard ways. Sort of thing. But at the end of the day, I would say there are 2 things that the company sort of discovered along its journey. And that was the fact that, look, while I'm targeting farming, right, the value actually lies in people who consume things from farming, right? Not as far up as us, but the intermediaries between us and food on a land basically here. And how do I bring these digital overlayers to actually stitch together what is, as one guy told me, the most critical raw material for me to actually exist as a company, and I know nothing about it, right, at all. I mean, I scrambled to access this, I scrambled that, right? So I think what they saw was the fact that it was such a technology poor area. And to be able to actually create data and make these connections of what was a very critical linkage in supply chains, right, was enough to sort of, get customers on board. Yeah, right now, of course, it's moved on to add in, actually, I would say one of the most cutting edge AI solutions on actually being able to monitor farms, etc., through satellite images and all of that. So you're adding more, richer data layers on top, richer predictive layers on top to talk about what is going to come as opposed to what it is today. How can I actually change my ops or my lending patterns or my insurance patterns if I know what's going on? And that to us, again, is a story of how technology took what is a very fragmented production facility, built a virtual stitching layer to aggregate and monitor this whole piece, and then build the richer data layers on top to actually pull out a lot of value. And that company went from about 3,000 odd farmers when we invested to now like about 7 million across the globe. Yeah. So not just India, but like 60 countries across the globe, essentially.
Amazing.
Yeah. Yeah. So, and that's also was something that you saw, that some of the problems that you solve in India actually have a global application. Yeah. And there are lots of markets and lots of problem statements that are very similar to what we face that the globe is sort of facing. So I think that's one entrepreneur story, which I think is a super interesting one. I think I have another one where there are 2 entrepreneurs jumped out again out of a large company, and this is more on the sort of the R&D side, where they used to work for Xerox, right? And they had discovered as part of the Xerox that they patented all of this as well, right? That you could actually kind of do breast cancer detection by what is called a thermal camera. So it's looking at temperature gradients. It's the kind of things that take scans right now, seeing who's got temperature and who doesn't have temperature, like public space at this point of time. So that, look, they could actually put, really, really high level AI on these images and be able to detect things much better than traditional methodologies of sort of how you do, and it costs much less. It's sort of, all of that good stuff. Now, Xerox is not a medical company. this was a side product of something that kind of happened out there. And they managed to convince Xerox to spin this out as a company. This company is called Niramai today, right? And that started the journey of actually sort of, proving clinically, getting regulatory approvals, etc. What I would just say is absolutely game-changing technology, right? And this is one of my examples of game-changing technology where, this would never have happened in the West, right? People have the Gs of the world, etc. Everybody's invested, put their capex down into mammography, etc. There's no incentive for anyone to discover this, right? Like even if you came up with the idea, everybody would shoot you down. But that's, for a country like India and many other countries in the world, that's not true. So here, all of a sudden, you're coming up with a solution where you actually don't need this fancy, expensive radiologist. It's much better for you. It's like non-touch, non-radiative. You could do this assessment yourself. You're supposed to go into this hospital, all of this good stuff. And you are using AI, right, to be the smart person here, right? And this company, again, the solutions have been used from like a public health clinic in a village all the way to in Japan, right? So again, sort of demonstrating that a disruptive technology coming out of India actually has very, very broad applicability, right? And they just actually closed getting European approvals to be able to sell in Europe. Yeah. So again, a absolutely amazing journey of sort of how.
Right. Yeah, both fantastic stories. Both these sectors, right, agri-tech and health tech, I mean, they've seen tremendous change. COVID happened in 2020 and, of course, literally has turned everything in healthcare upside down, right? So we've leapfrogged many years, I would say, right? And then on the agri side as well, I mean, you're seeing a lot of reforms being announced, and you're going to have a wider access to farmers are going to have a wider access to markets and so on and so forth, right? Any significant trends that you see in both these sectors that could really play an important part going into the future?
Yes, absolutely, right. So, and it's funny that you bring those two sectors up. I see a lot of similarities here of how technology can play a role in these sectors, right? And again, if I can divide them, there are, and I want to talk about AI in these two sectors and sort of how they can actually transform things here, right? So I think there's a lot of, there's a lot of tailwinds, right, for digitization of these sectors, right? And that's level one of what you're seeing out there happen, whether it's supply chain digitization, whether it's healthcare, us, through consulting doctors online, et cetera, and, our records getting digitized and all of that, right? So there are tailwinds pushing digitization at a much faster pace, thanks to COVID, than would have happened before. We all needed to eat, I guess to go into the same problems, but whatever. So how to keep supply chains up and how to know what's kind of happening, that's forcing the digitization on both these chains, right? What's interesting is that there are two sets of problems in this, in both sectors, right? Where as this data gets generated, I think the higher level data analytics can sort of kick in. One is, if I take healthcare, right? It's our data, right? Like, right now there's pieces and fragments of it here and there, right? There is no way to kind of like holistically be talking about, here are interventions for you, because I'm looking at a track record of what has sort of happened. I am kind of drawing parallels between, thousands of other people who might have similar trajectories or not have similar trajectories and sort of call you out more in sort of preventative stuff, right? And what that really requires is a lot of data and a lot of understanding of just the patient, but also of the ecosystem here. And digitization gives you that tool to make that happen, as long as you can structure that data. The other side of AI in healthcare that is kind of happening is on imaging, et cetera, right? Where you have devices kind of like Niramai, or whether it's, X-rays or, other things that is throwing up tons and tons of data, right? So you have technology and AI working on those to give you much more deeper insights and pull out things out of all of these. Similar piece in agriculture, right? So you're seeing the digitization of the chains. Here are markets that are inefficient. To know how markets will behave and prices is super critical, right? So it is generating all of that data, and very soon we will see some of the stuff of the deeper layers on top. In parallel, you're having the same image type stuff happen in agriculture. So whether they are satellite images, which are becoming, being analyzed to give you much more deeper information of what's happening, or whether there's actually imaging technology from the phone of taking pictures of produce, grading it, or pictures of pests and disease, right? So again, structured data and unstructured data, and they both are producing value. So I see a lot of similarities in the two. And I see in the next 5 years, as this digitization wave gets over, I see a lot of these solutions starting to build on top of this. Yeah.
Right. Something we spoke about earlier is building for the next billion, right? Or building for Bharat. What are some things that you're optimistic for in general about this? And in your experience, what are some nuances you've noticed with this class of users?
Yeah. Let's start from that question. Yeah, the tough customers, right? So anybody who's not, they'll drop you if things don't work, they'll drop you immediately, right? So in my opinion, getting your product right in these markets is very, very critical, right? Simplicity, to the point, the value prop being very, very clear as to why you should be using it, right? And I think once you crack that, these customers are very sticky. They're very loyal, right? It's not this thing. But the first bit, you can't be all over the map, right? You can't be like, okay, I should have put this button here and I haven't put the button here, and this is my second navigation screen and all of that stuff, right? There's enough friction in people's lives. Adding friction products are not useful, right? So getting product right in this market is super important. I think this market is actually a great technology adopter, right? And I think the problem actually lies in product and UI and interface on this side. And as soon as somebody cracks it, you see the explosive growth that's happened. I mean, it's a lot of the entertainment stuff, right? I mean, you are cracking something that, delivering that in a form that is consumable, and you see massive usage of it. So as soon as you then start cracking the next layers of this and making that at the same level of usability, I think there's a huge potential of what can happen. And you're starting to see the trends.
Right. Yeah, I mean, I'm just reminded of a conversation earlier that I had with a few Agritech entrepreneurs where they say that, there's simply no vanity purchase as such, right? I mean, it has to be something really, really essential for these folks, right? And if you do meet that expectation, I mean, then they're loyal with you as such. So
I don't agree with that statement, right? So
okay.
I think we're all human beings, right? And we have vanity points and we have non-vanity points, right? You have different vanity points, I have different vanity points, so do folks in different markets.
Sure.
I think we're lazy when we say that you want to put everybody into the same bucket.
Yeah.
Right? And I think that you've got to figure out what the vanity points are and what are not. So I was in the middle of nowhere, and I can tell you that there's a father and son. They were traders. Okay, the father's obviously old, doesn't want to do anything on the phone, right? The son was busy pushing, let's do all these transactions on the phone, right? The father's like, I've spent my life on this, like, what's your problem? Shut up. Okay, the son is kind of like, wants to walk around with the cool phone. Okay, so the father's not seeing value in this whole thing. The son is pushing it, right? Finally, do you know how the guy convinced him to sort of use this whole piece? He said, मैं पोस्टर लगा रहा हूँ, आपका फोटो लगा देता हूँ उस पे, right? Complete vanity metrics over here, right? So you do have to figure that out. I don't think it's so simple to say there are no vanity metrics.
Right. No, you're absolutely right. I mean, I guess it's a lot more complex, right? And there could be different cohorts within this itself.
Yeah,
so
there's huge number of cohorts. Yeah.
I come from the SaaS world, so you have to kind of excuse me, right? So
Yeah.
I mean, we have more soft, nice to have softwares than I mean, like essential softwares in some sense,
Yeah.
right? And
Yeah.
so yeah. The VC business itself is changing by leaps and bounds, right? There are new challenges and opportunities, and you're starting to see a lot more activity at the early stage itself. 2020, the number of deals increased and whatnot. So, what do you make of this market, this current ecosystem that we have? What are some
So I think the market
challenges
has
or
shifted,
right?
completely. I think there was, people operated in different slices when we entered the market. Early stage was a missing piece here, right? There were people with us, how do you navigate from early stage to larger checks? I think what you're seeing now here is people playing cross stages, right? So a lot of larger funds doing seed checks, but also doing growth checks, and so spanning a whole different spectrum. Yeah, right. So I think those, you see smaller early stage funds getting larger so that they can continue to participate in companies, right? So I think these things are obviously moving, and they obviously will continue to move, because we've been a nascent ecosystem. It's what, been 5-8 years, right? And these things do go with different flavors as they go. I think the positive in the ecosystem is that there is a lot more money, right? There is a lot more money. And, earlier people would think about, oh, is there money to get early checks or, whatever it is. But now there's enough money to take you through a journey, right? To take you through a journey to build a, I don't know, let's call it a huge, successful company at the end of it all, right? So there's no dearth about that. I think the question is, how does that give you the best return, right? And that means, how do you best spend it? How do you best invest it? And I'm talking about the entrepreneur here, right? Not the investor, because you've got to be smart about how you spend that money to get to that piece here. So I think it requires, there are problems of underfunding and not having enough money at a company. There are problems of having too much money at a company, right? So when there is a lot of capital, it actually requires the entrepreneur to be much smarter about how you actually deploy the capital, and you get an ROI for that capital, right? Because it's much easier to spend money stupidly when you have a lot of it and you're not worrying about it. But I don't think that's the solution. I think the thing is to say, look, there is a lot of cash. I can actually spend this and actually have this cash for a journey to build something at the end. But I need to invest that smartly.
Right. Yeah, one of the quotes that I had read earlier, which makes sense, is an equal number of companies die out of indigestion also, not just starvation.
Yes,
Right.
absolutely,
Right.
absolutely, right. So I mean, just like food, starving is not good, overeating is not good either. So
Right.
balance is always the key here.
Right.
But I think it's very, very exciting that there is this cash in the ecosystem, right? Because at the end of the day, you do need the cash, right? Things can't come out of anywhere, right? But having that availability of cash and actually building things out of that is I think an exciting piece here.
Right. So, with the availability of cash, it becomes super important for a VC firm to add strategic and, to an extent, operational value also, right? Value beyond money in some sense, value beyond capital. So, what are you doing in that regard? And if you could talk about Ankur Grow
Sure.
also.
So, I think for us as an early stage investor, and from day one, I think there have been two investments we've made. One is money, the other is what I will call help, and however we can help, right? What is it that we can do, roll up our sleeves to help the entrepreneur sort of hit their escape velocity here, right? And I think we continue to do that, and we continue to, and we call it Ankur Grow, and that this is absolutely critical, especially in the early days, right? When you're kind of hustling, you're trying to sell, you're trying to get product market fit, you're trying to fix a lot of things, right? And it's not about necessarily hiring everybody. That doesn't really kind of solve all of it. But how do you hustle your way out of this, and what are the key pieces here, right? That and we continue to sort of do that. I think the two components of this that I think over the years that we've learned is very, very critical. I think one is, as an entrepreneur, and this is true for us also as an entrepreneur, as a fund, right? You're in the weeds, right? To have mentors and sounding boards that can pull you out of the weeds to reflect what's happening on the ground is very important, right? One is customers, and they tell you by their purse strings here as to what's working, and the other is from how you're approaching this, etc., to actually have that sounding board. And that's at Ankur we strive to sort of do that, right? Whether it's ourselves as supporting entrepreneurs, or whether it is bringing in people who are good sounding boards, we look to sort of do that. for companies. I think the second is to help in the hustle, right? And the second big area is like, how can you need to sell? That's all it means to, get customers, as you said, fail fast, figure that whole piece out, right? How do we help you do that better, right? Like, can we actually get customers to, can we help you with customers, connects, networks, whatever it is? That's a hustle from our side also often. Of course, we leverage our networks and all of that, but sometimes it's a hustle from our side as well. And we're happy to hustle along with the entrepreneur to say, how do we get that? Because those two things are very important. We do bring other things to the table, important things as well, sort of making sure your hygiene, finance, taking a look and making sure that the back stuff is all sort of getting sorted. Helping you recruit talent, because at the end of the day, as I said at the start of this conversation, one of the things, people are super important. So if you can get the right other person next to you, so much better for you. So those are other things that we also sort of support on, right? But I think to get you sort of, laser focused on where you're going, to get you that sounding board so you see what's happening, so you can stay in the weeds, but still see what's kind of happening, is super critical. And the second part is about hustling and getting you what it needs to get you to sales happen. So that's what Ankur Grow is all about.
Right. Definitely sounds interesting, and I think it could be super valuable for early stage entrepreneurs, especially. I also had a question on how you validate your own decisions, right? Given that your own cycles are so long. I mean, if you invest in a company now, how do you know that, how long would it take typically, right? I mean, 3 to 4 years. I don't know how long it would take for you to really validate your initial thesis behind investing in a company itself, right? So how do you know that you're on the virtuous path in some sense?
You don't. It's a long journey. I guess there are proof points along the way, right? I mean, early customer wins, right? Broadening of customer bases, fundraisers, right? All of these things are indicators that, look, this is sort of working, right? That this thesis does actually sort of pan out. And but as a venture capitalist, the proof of the pudding lies, it's called investment, but actually it should be called money return because that's what our investors in. So the proof in the pudding at the end of the day lies in us returning money, and that's a long journey. It's not a short journey, right? So cash in and cash out is a long journey. So, but I think about the businesses that you invest in, they definitely are milestones along the way, right? That are indicators that things are working. Yeah.
All right. So before we end the podcast, and this has been a fascinating conversation. Thank you again for making the time for this. Before we end the podcast, some closing thoughts in terms of what you're optimistic for going forward, any future plans that you would like to talk about, and some new initiatives and so on.
Definitely. So I'm optimistic. You can't be a venture capitalist or an entrepreneur without the optimism. I think this is the start of journeys, and it's a great time to be an entrepreneur in India. There are so many problems, so many large, massive markets, right? If you set your mind to it, you set your heart to it, there is a lot to sort of to be done. Yeah, right. As Ankur Capital, I think we're obviously excited to and will continue to sort of invest along the themes that we've sort of, outlined and chatted about over the last half an hour or so. I think the one new initiative that we're still exploring, and something in the books here, VC supports a certain kind of disruptive technology, fast scaling, fast growth, right? But there are a lot of entrepreneurs who are thinking of doing things, but not necessarily on that trajectory. Yeah. So from a financial instrument perspective, is there ways for us to support those? I don't think we've quite cracked it, but that's a new initiative that I'm excited about. That how do you unlock the entrepreneurial potential of companies that don't necessarily strive to be $5 billion? So, that's not what it is, but still actually can create value in the market and have a different journey.
Right. Could you talk about that a little more in terms of what the instrument itself could be? I mean, is that like debt or anything else that you think?
It's not quite debt, right? Because things are still risky, right? So, if it was all plain vanilla debt, you'd have a nice old bank that would come say, hey, here's the money for you, right? I think it's more about sort of, whether this is like a revenue-based instrument or it's a cash flow-based instrument, right? So somewhere along those lines, right, where it kind of supports your growth trajectory. I mean, it can't be an organic growth trajectory, right? So I'm differentiating between a hockey stick and perhaps something that's less than that, right? Basically, yeah, where it can't just be that, look, it's business by usual. That doesn't really help, right? But you've got something that's interesting and exciting. And, I see a lot of these sort of in like med devices, et cetera, where they may not be hockey stick curves, right, as to how that whole thing works. But at the end of the day, they're super exciting innovations. There's a lot of value for them in the market. But they're not necessarily addressing 10 billion market, 20 billion markets, 200 billion markets, right? That's not really what sort of they're after, right? So can you look at some cash-based instruments here that allows that growth trajectory to happen and a financier to come in and make returns that are commensurate with the fact that there is still a risk, there's a high risk, it's not a collateralized debt lending. Yeah. So that's somewhere where we see some of those kind of instruments perhaps playing a role, and we're working through seeing whether there's something to do around this.
Right. Yeah, definitely sounds interesting, and we'll be sure to check it out. Thank you again, Ritu. This was a fun conversation, and look forward to speaking to you again.
Thanks a lot. Enjoyed it. Good luck.
Thank you.
Bye.
Thank you so much for listening. If you liked this episode, then don't forget to subscribe to us on your favorite platform and share this episode with all of your fellow startup operators. Also, follow the Startup Operator on LinkedIn and Twitter for more updates. Stay safe, take care, and see you soon on a brand new episode of the Startup Operator.